What's up, you guys? Alright, let me take this shit off. Alright, let me get to it. So, the market so far is acting happy to this because pretty much in a couple of weeks, September 14 and 15, or 15 and 16, one of those two. But in that week, Powell's gonna have its next interest rate decision, and the whole point of cutting interest rates has been, and Powell has said this over and over. The Fed has said this over and over, is they will only cut it if labor market is showing weak, because labor market is your first signs that there's a recession, potential recession on the way. And since these numbers pretty much have been technically way low all these past ones, that's what investors know, that's what the Fed, so technically since the Fed said that, and that's technically what's happening, now investors and everybody is looking forward for the Fed next interest rates, because there's a high chance now that they're gonna cut them based on the bad labor report data. And that's when you're also seeing the market positive to it. If you notice, just by looking at this, it picked up 50%. And that's what markets normally do for the drop. But normally that 50% recovery takes a while. And over here, it pretty much took it one day. But like I was telling a friend of mine, if the next rate cut decision is gonna be on the 14th or the 15th, you can even see right here right now. Traders load up in hopes of rate cuts. Bad news is good news. See, so everybody's looking for this. Like, if you've been following the Fed, this is something he's been saying over and over and over. Hey, I'm gonna only cut interest rate if job labor market is looking bad, and it has. So it almost lets you think that the comment or the way they set everything up was just the right time, the right place type of thing. Because what coincidence now that, oh, by the way, the job report were mishandled or whatnot, or miscalculated, whatever excuse they're gonna say now. And they're gonna, what they're saying is because they have to pretty much guess how many people will be adding onto the market, this and that, and then they get the real results, and it's just a mess to really find out, how many, if the data is accurate or how accurate was the data. And especially after the third month, that's when they really get all the really exact data and whatnot. So anyways, so it's too easy. To me, this is too easy. And you still have a month and a week or so till that comes up. So what I'm saying is, if that is gonna be a month and a week from now, and the market is already at 50%, you can see it's at a point resistance that's trying to pass through. You can hear, you can see it here, you can see it here, you can see it here, you can see it clear here. And then once it breaks that, your next stop is gonna be right here, which is area where my indicator is telling you, hey, we're gonna stop. And then from there you have this area, and then from there you have this area, and then you fly off. But the main attraction, the main resistance is, let me take this, so I'm gonna mark it off with the alarm. The main hard resistance is right here in this weekly. And once we pass this, it's pretty much fucking flying or whatnot. But, so I'm saying, like, it's it's too soon. You mean telling me this week, either this week we're gonna close, but it's really Monday, so I don't see it closing here. So either we're gonna go on some sort of downtrend, maybe some sort of surprise tweet, something where the market's not gonna feel confident. Maybe it could be next week, and then we could create a high, low, high, and then low, and all that fucking bullshit. Get up here, come back up again, and then have another drop, and have this downtrend. Or, because again, Monday, Friday, we're gonna close somewhere. We're gonna close somewhere in between here, 6,379 and 6,341. But it's maybe, this was Monday, this is Tuesday. So if by Tuesday, Wednesday, we're here, Wednesday, Thursday, then no, if we're up here fucking by tomorrow, Wednesday, big bullish, but it's too early. That means that the rest of the month and a half, I mean a month and a week, whatever, we're gonna fucking rally on up, and then when the rate cuts come, we're gonna keep on flying. That doesn't make sense. And then this week we don't have no data at all. I think we only have data Thursday, I believe. So this week is just gonna be based off on hope. The market is just pretty much rallying on hope, on possibility that rate cuts and blah 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 blah. This was it. The market's gonna go up from here because rate cuts gonna happen, but it's a month and a week from now. So that's why I feel like there's gonna be some sort of trap, but again, it isn't. Let me put the. Oh, it's already on. But then the next thing that gives me the rally move or the market is safe, like I said, is this cushion, especially on the daily, and gives you the hard support that it needs to hold. So that was good. The next thing was this resistance, which is broke, which now the market needs to come back down, retest it. You can see the support right here, and that aligns with this. Tested. It's probably some 50 Fibonacci right there. Yeah, it's a 50 Fibonacci. So this 12-hour candle for tomorrow, and it closes tomorrow today at 2 in the morning. Yeah, so it needs to either go and hold here. So then the next 12-hour candle from 2 in the morning to 2 p.m. is going to come down, test this area, which is going to be that 50% of the 8-hour candle, and then should hold, and then go back up, continue. But again, it's too close to the all-time high. So tomorrow, we need to still be bullish. We need to hold close somewhere here or here. So then from 2 in the morning, from 2 p.m. tomorrow to 2 a.m. tonight, the market then correct and keep on going down, because again, we just smashed through this resistance. So we're going to come down, test it, and there's the 8-hour 50 Fibonacci right here. So the 8-hour 50 Fibonacci needs to also come and get tested, and then to continue on up. But again, we're so fucking so close. Because you also got to remember that we still got the rest of this month data. There's a lot of data that we're not aware of. We are just thinking, oh yeah, look, rate cuts on the way, we should be good. But then you gotta remember that we have a lot of important data the rest of these weeks, and those weeks could then fucking bring the market back down, you retest you, and now everybody's gonna be more shaky of, you know, because it's too good to be true right now. And again, another thing I want to point out, so we have a 8-hour 50 Fibonacci that we just smashed through that I pointed out last night, that was very important. And it all depends how we close today, and based on how we close today, I was like, oh shit, like this is, and then, but it makes sense because the market is too happy. Then we have a 1-hour 50 Fibonacci here, and a trend line, a weekly trend line, the one that we've been on, that I mentioned on other videos. If you, I'm not gonna go through and make this video more longer for you guys, for whoever's watching this. These I like to divide the market into sections. I'm not gonna go over all that bullshit to make it more complicated for you guys in this video. I wanna get to a point. So it's 11:34. Your sweet spot for S&P during these 4-hour candles, 11:45 to 12:30, because the market, the 12-hour candle closed at 2. So this is gonna be your time. On top of that, I talked about that resistance that it's trying to break through. So by 2 in the morning, by 11:45, 12:30, we'll need to get out of this zone right here and be somewhere up here. That way, we close here at 1 o'clock, and then give it a try and close somewhere here at 2. And then we're gonna hit this resistance right here. Let me see what my indicators tell me where the next resistance is gonna be at. Oh, so focus. So there's no really resistance. No, I've tried to go show lower yet. So, and then my indicators tell me, see, this is your entry for a sell, or entry for buy. Buy. Why? Because that's the sender. That's the main resistance. So like I said, we need to do that in order to continue going up, and we're gonna struggle here and then come back down and push in this area tomorrow most likely, or we're gonna struggle here, and if we're not there, if we're not out of here by 11:45 or 12:30, and we're up here in the region, then we're gonna, and if we're still here by 11:45 to 12:30, or if by 12:15 we start coming down here, we most likely gonna start coming down and testing this 50 Fibonacci, and then the next bottom support, yeah, it's gonna be in this area right here. What you don't want is to get some sort of bad news, especially let's say in the morning we're down here, right? 2 in the morning we close somewhere here. It's 3 or 4. As the market open again, we go up. But let's say we get some sort of bad tweet, a nuclear bullshit or something, then the market, we don't want the market to form some sort of H, because then we're gonna come down here to where the 50 Fibonacci is at in the 1-hour candle, and be getting off of the weekly, and that's gonna be telling you, giving you your first warning signs that this week may not be so good, and this may not be really that clean sweet rally that it looks like it's gonna happen, because this play looks so fucking easy that if I was to begin this and somebody told me about support resistance, I would have been like, oh, we're gonna go up from here because it broke in the 4 candle, and this is snap, and we're gonna go up from here. But it's too easy, and we got a lot of time. In between that time, you mean tell me the market's gonna keep on flying till August break? No, we gotta have a lot of data in between these weeks. So I already mentioned that, and I mentioned this about Bitcoin and Ethereum, how it's gonna follow S&P 500. Also, because Bitcoin also went down and hit right on this weekly trend line. it starts from right here. You stretch it out, touches right here, touch right here, touch right here, touch right there. So all that tells you that that was your bottom, and we should be then recovering, rallying from there. That's what they normally teach you. Alright, gotta do this shit. This is a weekly 50 Fibonacci. What I mean by that is this 50% of that. So in case the market does come down some crazy ass and we're somewhere here, I know where we're gonna stop. Not just that, but trend lines along the way and all that shit. That's why that blue trend line was very important. And so I'm not really on Bitcoin checking for trend lines. I noticed a trend line over the weekend. I was like, oh, I could have seen that coming if I would have known about the trend line based on how the market was falling and everything. Especially once it was here and I was seeing this trend line. I was like, oh yeah, we're gonna fall down, touch here, it's gonna be your bottom. And depends because again, just like SPX, Bitcoin is hitting a hard resistance right here. And the EMA indicator is showing you, hey, there's a thick ass resistance, and here's that island that I was floating on, that Bitcoin was creating. And what I mean by that is because it hit. Just imagine this is Earth, and there's a floating island, and this is the foundation. This is the bottom of it, and this is like think of it like that foundation of it right here, and this is where it stops. Once it went to that foundation, that was your first warning, and then yeah, from there, well, you know what happened. And notice how it fell on the weekly, but again, it's too early, and it has to go through that thick layer right there. And on this, so we made for you want to wait, pay attention to this because it could be a 3 candle box, just like some like this, but this wasn't really perfect. The first one is like right here. You have a 3 candle box right here. First one gives you your resistance because it's a new price, it's a new area. The next one gives you support. You box it up. So then at the end of this day, will it be the 4-hour candle, 3-hour candle, depending on its forming. Once, and let's say right here it could have been that 4-hour candle, 2-hour candle. All of a sudden you're thinking it's gonna go down because it's a daily candle and it's on red, so you're thinking it's gonna go down. But again, at 3 in the morning, at 3, and oh yeah, it was a Sunday. So then at 3 p.m., when it's when it's almost about to be closed for the day, here comes the regular market opening at 3 p.m. The S&P opens at 3 p.m. and catches on to the S&P 500. The S&P 500 opens up happy, and then boom, Bitcoin goes back into the box, and we fucking shit out that box. So that's why we want to pay attention to this. There's no resistance or nothing on the weekly here, or the daily. So there's your first resistance, depending on where this closes. If it closes somewhere here, that's gonna be an easy one. You're gonna just create a box right here, and then on the next one, it all depends. It all depends on the last 4 candle where it's at. But it's not a perfect box. A perfect box is normally when you have it somewhere clear like that, or when it's just 1 candle. This is 2 candles, so it's not really a 3 candle box, unless it closes perfectly like that. Then it's gonna be a beautiful 3 candle box, and easy to catch, easy to predict. And the thing that I don't like is, again, Bitcoin and S&P are telling you the same thing, that we're hitting this hard resistance. This is a monthly right here. See? We're hitting a hard resistance. So, and we're near that weekly trend line. So if S&P gets some sort of bad news, the same thing that I told you, they're gonna start creating this H form, and then the market's gonna start panicking. That's gonna be caused by some sort of tweet, comment, or this week because we have no data, or comment or tweet by somebody else, and then the market. So right now, this week we're just sustaining on hope pretty much. If we notice, there's no data coming out. There's no weekend. There's nothing that data said. Oh yeah, but this is looking good. So you know what I mean? There's nothing that's keeping that floating. It's all on hope right now. Same with Ethereum. Ethereum's showing the same thing. Look, you take this shit off. Go to the weekly, monthly. See, we're by hard resistance. Still bullish, but hard resistance. Let me see for any trend lines. No, not that I. Oh yeah, there's a weekly trend line also. So besides that monthly resistance, there's a weekly trend line. It goes from right here to right here, and that's when we're not stopping this last week. What coincidence, right? Right on that weekly trend line. Let me show you real quick. See, last weekly trend line. Alright. Let me see if I find a trend. If I have one. Oh, there's a daily. Oh, this one right here. Yeah. Oh no, it's a weekly and a daily. Just say these one. Oh, okay. Right here. Yeah, that's near two. But again, in order for the market, S&P and Bitcoin or crypto to go down because they're connected, there's gonna be some sort of tweet or comment or war issue, especially with both Israel, Iran again, or something like that. Um, but it's not gonna be enough. I believe it has to be really some crazy ass shit for investors to shake off the good news. Because you gotta remember, investors don't give a fuck about really the Epstein files or any of this rumor bullshit. They care about data because regardless of what rumor is going on with the president, as long as data comes out and these earnings are good, market's gonna go up. I'm gonna make money. That's their mentality. Again, also we have a 4 candle 50 Fibonacci that Ethereum is testing right now too. So it closed this 12 candle at 5 in the morning. It closed a 4 candle at 1. So we're gonna be up here by 1, or we're gonna be testing this lower region right here. And if that happens, most likely S&P is gonna be doing the same. But anyways, we'll see how it plays out, you guys. We'll see how it plays out. To me, it's too early for the market to be flying because it's too close to it. But we'll see what happens. This is Brian Seacrest.